Hello and thank you for joining this webinar about the self-employment section of your online tax return. Before we start today's webinar, I'll just mention our other webinars in the series that will help you with your self-assessment tax return. They are starting your online tax return, the employment section of your online tax return, the UK property section of your online tax return, other income and tax reliefs on your online tax return, finishing your online tax return, and your self-assessment, calculation and payments. You can join these live webinars where you can ask questions or watch a recording of the webinar, which you'll find on our help and support pages after it's been delivered live. In today's webinar, we'll look at the details of your business and your turnover, expenses, capital allowances and balancing charges, other tax adjustments, the losses page, tax deducted and Class 4 national insurance contributions, and Class 2 national insurance contributions. So let's start with how you tell us the details of your self-employed business in your online tax return. This is the first page of the self-employment section. The name of the business is the name you provided when you tailored your return. If you don't have a business name, just use your own name. To fill in the details, you'll need records of your business receipts and expenses, or profit and loss accounts. On details for your business, page 1 of 2, the first question asks if your annual turnover in the tax year was £85,000 or more. Briefly, your turnover is the total amount of cash, cheque and card payments received, payments in kind for work done or goods sold that aren't paid by cash, cheque or card, fees, tips and commissions, and money owed to you if you are using traditional accounting. The Help About link gives more guidance on what to include. If you only traded for part of the year, for example when your business starts, ceases or is sold, you need to check your turnover on a pro rata basis. For example, if you traded from the 6th of October to the 5th of April, that's 6 months, and your turnover was £50,000, then your annual turnover would have been £100,000. If your turnover is £85,000 or more, you'll need to give a more detailed breakdown of your self-employed accounts. If you're not already registered for VAT, you also need to consider this. If your annual turnover is below £85,000, you're given a simpler version of the self-employment section, which we'll look at today. You may have heard that the VAT threshold has increased to £90,000. This change applies from April 2024, so the £85,000 threshold still applies to this tax return for 2023 to 2024. This next question asks if you're affected by basis period reform and have a transition profit or loss to declare. I'll just briefly explain what basis period reform is. Basis period reform will apply to you if your business accounting year doesn't match the tax year. So if your accounting year doesn't end between the 31st of March and the 5th of April. If this applies to you, the way you fill in your self-assessment tax return has changed, starting with this tax return for 2023 to 2024, which is a transition year. You'll need to report profits for your normal accounting period, plus any profits up to the 5th of April 2024. This may mean you also pay tax on additional profits during the transition year 2023 to 2024, called transition profits. However, You may be able to claim overlap relief to reduce the transition profit. Find out more about basis period reform in our YouTube video, Moving to the New Tax Year Basis, Basis Period Reform. Gov.uk also has lots of information and examples. There's a link to this page, Changes to Reporting Income from Self-Employment and Partnerships, in the Help About guidance. The page has links to tools which will help you get your overlap figure and work out your transition profit. So if your accounting year doesn't match the tax year, answer yes, and you'll need to give a more detailed breakdown of your self-employed accounts. You'll also be given a section to tell us the details of your basis period transition profit or loss later in the return. If you select No to both questions on page 1 of 1, we ask you to check through a list of circumstances and select any that apply to you. Towards the bottom of the page, there are some options for people who have a turnover of less than £1,000 but still want to fill in the self-employed section. For example, if you want to pay voluntary Class 2 National Insurance contributions to build entitlement to contributory benefits like state pension. If none of the circumstances apply, select None of these apply at the bottom of the list. On page 2 of 2, tell us the details of your business. Your business name will already be shown as you gave this in the Tailor Your Return section. This may be your own name or a trading business name. You have to enter a description of your business, trade or profession here. For example, plumber, hairdresser or online selling. The remaining questions are all optional. However, to keep your records up to date, it's important to tell us if any apply to your business, especially if you stopped trading before the 6th of April 2024. If you answer yes to this question, we'll ask you to give the date you ceased. On this next page, we ask about your accounting details. Firstly, tell us the date your books or accounts are made up to. It's usual for people to keep their business records to the same date each year. This is your end of year date or accounting date. As the tax year ends on the 5th of April, many people use this as their accounting date. We then ask if you're using the cash basis to work out your income and expenses. This is instead of using traditional accounting. With traditional accounting, you record income when it's due to be paid, even if it's not paid to you, and you record your expenses and deductions when they're due to be paid, even if you don't pay them at that point. Cash basis is a simpler way of working out your income and expenses. You record your income when you actually receive it and your expenses when you pay them. You can choose to use the cash basis if your annual turnover is £150,000 or less. If you do and you have more than one business, you must use cash basis for all of them. The combined turnover from them must be £150,000 or less. There are some businesses that can't use cash basis, and it may not suit your business as it does restrict claims to some expenses. You can find out more about using the cash basis on gov.uk. Changes to using the cash basis from the 6th of April 2024 do not affect the tax return for 2023 to 2024. However, from the 6th of April 2024, you'll need to start keeping your records for the 2024 to 2025 tax year using cash basis unless you either choose to use traditional accounting or you cannot use cash basis. You can find out more about the changes on gov.uk. Just search gov.uk for cash basis. If you change from one accounting method to another, so you switch from traditional accounting to cash basis, you may need to make some one-off adjustments to work out your profits. You can find out more about these adjustments in Help Sheet HS222, How to Calculate Your Taxable Profits, on gov.uk. The first box on this next page is for the turnover of your business in the period up to your accounting date. If you are using traditional accounting, this may include money that's due to you but not yet paid. Enter any other business income that doesn't form part of your turnover here. For example, this could include rental income from letting part of your business premises or payments for the right to cross your land. Don't include income that you intend to include elsewhere in your tax return, such as business bank interest received. This is where you can claim the trading income allowance of up to £1,000. If you choose to use the allowance, enter up to £1,000. If you have more than one self-employment business, this can be split between them, but the total claimed cannot exceed £1,000. However, if you also have a property business, you can claim the property income allowance as well as the trading income allowance. Let's look at an example. Chris has two self-employed businesses. One is online selling and the other dog walking. These are the incomes and expenses from each of the businesses. Chris is filling in a self-employment section for each business. As they don't want to pay any tax on the dog walking business, they enter £475 in the trading income allowance box for that business. For the online selling business, Chris can use the remaining trading income allowance of £525. That's a total of £1,000 across the two businesses. They'll pay tax on the remaining online selling income of £1,325. If Chris hadn't used the trading income allowance and shown the actual expenses, they'd have paid tax on £1,525. So Chris is better off using the trading income allowance across the two businesses, as £200 of the income is covered by the allowance and not being taxed. When you use the allowance, you cannot include any allowable expenses or capital allowances in any business. So if your expenses are more than £1,000, you may be better leaving the trading income allowance box blank. You can find out more about the tax-free allowances on property and trading income on gov.uk. The system works out your total income for you. If you've entered an amount for the trading income allowance, this will not be taken off your income at this point. It will show in your profit figure later in the self-employment section. Let's now look at allowable expenses and how you enter them on your tax return. Remember, if you've used the trading income allowance, you cannot enter any expenses. Before we look at entering your allowable expenses on the tax return, we'll briefly look at what we mean by business expenses. Business expenses must have been spent for the purpose of earning business profits. This is known as the wholly and exclusively rule. You must keep a receipt or other document to show what you've bought and how much you paid for it. If you buy something that is used privately as well as in your business, only the business part of the cost is allowable. There are two types of expenses: revenue expenses and capital expenses. Revenue expenses are the day-to-day running costs of your business. For example, premises costs, phone bills, or stationery. Revenue expenses are allowable expenses, providing they meet the wholly and exclusively rule. Capital expenses are the cost of things that have a longer business use life, usually 2 years or more. For example, equipment, computers, or vehicles. You may be able to claim special tax allowances called capital allowances for these, so you don't treat capital expenses in the same way as revenue expenses. How you show capital expenses on your tax return depends on whether you are using traditional accounting or cash basis. If you are using traditional accounting, allowable capital expenses are shown in the capital allowances section we'll see shortly. If you're using cash basis, capital allowances are only available for the purchase of a car. All other allowable capital expenses are shown in the Other Allowable Expenses box if you're showing a detailed breakdown, or in your total allowable business expenses. You can find out more about the expenses if you're self-employed on gov.uk. When you're self-employed, you can also use something called simplified expenses for some costs. They are a way of working out your business expenses using flat rates instead of your actual business costs. You can use flat rates for business costs for some vehicles, working from home, and living in your business premises. You can find out more about simplified expenses and how they work on gov.uk. We'll now look at entering expenses on the tax return. When your annual turnover is below £85,000, you can choose how you want to record your expenses, either as a single total amount or as a detailed breakdown. If you choose as a detailed breakdown, then Save and Continue. This is the next page to complete. There are different boxes for the different types of expenses. The Help About guidance for each box tells you what to include. For many of the questions, it's clear what you need to include. But let's look at some. For those of you who produce goods or carry stock to sell on to customers, you need to make an entry here. If you use cash basis, enter the amount you spent on goods or stock in the year. If you use traditional accounting, there's a formula for working out the cost of goods bought for resale, and it's known as the cost of sales formula. I'll show you an example. Alan started his business on the 1st of September. Firstly, he would look at his opening stock, but as this is his first year of trading, there is no opening stock. Therefore, opening stock is nil. During his accounting period, Alan had spent £2,000 on plumbing materials, things like pipes, washers and taps. So, his purchases are £2,000. On his first accounting date, the following 5th of April, he did a stock take to see how much stock was remaining. He valued his stock at £1,147. His closing stock is £1,147. Alan can't put this £1,147 on his tax return, as he's not sold those items. So purchases of £2,000 less closing stock of £1,147 gives a cost of sales figure of £853. So if Alan is using traditional accounting, he'll put £853 on his return. The closing stock figure of £1,147 will also be his opening stock figure for his next accounting period. So remember to keep your paperwork showing your calculations for your next tax return. You can find more information about the cost of sales formula on Help Sheet HS222. In this box, you can show any wages paid to staff or employees. So this could be wages, bonuses, pensions and benefits. Also include agency fees and subcontract labour costs and employers' national insurance contributions. However, you cannot include your own wages or drawings, pension payments, national insurance contributions, and payments made for non-business work. The cost of using a professional, such as a solicitor, architect, or an accountant or bookkeeper to keep your records is an allowable expense and can be entered here. However, the cost of an accountant completing your self-assessment tax return is not an allowable expense. Other professional fees such as professional indemnity and public liability insurance are also allowable expenses you can include here. If you belong to a professional or trade body, then check List 3 on the gov.uk website to see if it's an allowable cost you can include. As it suggests, this is where you record any other expenses you might have. So what might you include here? Well, one of the most common is advertising costs. It could include clothing, not everyday clothing, but protective or work specific. So overalls, tabards, safety wear, or clothing bearing your business name or logo. If you subscribe to trade or professional journals that are relevant to your business, you can claim these as an allowable expense. Allowable training costs will also go in this box. Please note not all training costs are allowable. If you take a training course to update your skills, this is normally allowable. However, training which results in a new specialisation or qualification is unlikely to be allowable. For example, if a plumber decides to train as a gas fitter, the cost of the training would not be allowable, as this would give them a further specialisation. As I mentioned earlier, if you are using cash basis, you can also include any allowable capital expenses, except for the purchase of a car. If you choose to enter your expenses as a single total value, you're given a box to show your total allowable expenses. The Help About link gives guidance on what is and is not allowable. There are also links to videos on HMRC's YouTube channel. Just as you would if you've given a detailed breakdown, you need to keep accurate records of all your expenses and evidence to support these in case we ask to see them. Don't send these to us unless we ask for them though. When you enter your total allowable expenses, the net profit or loss is worked out for you. We'll now move on to look at capital allowances and balancing charges. Please remember, you cannot claim capital allowances if you've used the trading income allowance. This is the capital allowances and balancing charges page. If you are using traditional accounting, capital allowances can be claimed for some buildings and the purchase and improvements to equipment and machinery, such as vehicles, tools, computers, and business furniture used in your business, sometimes known as plant and machinery. However, if you are using the cash basis, you can only claim capital allowances on cars used in your business. A warning message is given to remind you. As you can see, there are different boxes for the different types of capital allowances. We'll briefly look at some of these. This first box is for annual investment allowances, sometimes known as AIA. With AIA, you can enter the full value of an item that qualifies for AIA. Most plant and machinery up to the AIA amount of £1 million can be claimed. However, you cannot claim AIA on business cars, items you owned before you started using them for your business, and items given to you or your business. You need to claim a writing down allowance for these. Writing down allowances let you enter a percentage of the value of certain items on your tax return. The percentage you can claim depends on the item and the pool they belong in. You may be able to claim more if you can use one of the other capital allowances. For example, annual investment allowance, 100% first year allowances, or temporary first year allowance. For business cars, the rate also depends on their CO2 emissions. Writing down allowances are entered in the Other Capital Allowances box. So, how you work out and show capital allowances depends on the amount and type of capital expense you had. If you need to claim capital allowances for a car or when you're using traditional accounting, there's lots of help on gov.uk and in the Help About links for each box. Balancing charges may arise when you sell or dispose of an item which you have previously claimed capital allowances for and may affect your profit or loss. You can find out more about these and capital allowances in Help Sheet HS252. We'll now move on to other tax adjustments. On the Other Tax Adjustments page, enter here the value of any stock or goods you've had for your own use. If you included any disallowable expenses earlier, also include them here. If you have a net business profit for tax purposes, you must enter here any earlier year's losses from this business that you have not yet used. You cannot enter an amount that is higher than your net business profit for tax purposes in this year. Any earlier year's losses will be used against your profit for this year. If there are any remaining losses, these can be carried forward to be used against the next available profit from the same business. If you have any other business income that you haven't already told us about, include it here. This includes business income that isn't trading income. Your taxable profits from this business or net business loss for tax purposes are worked out for you based on the figures you've entered. Let's now look at the losses page for your business. This is the losses page. You can tell us what you want to do with any losses from the year of the return on this page and about any losses to carry forward. Rules and time limits apply to loss claims. For example, if you are using cash basis, losses can only be carried forward and set off against future profits from the same trade, except when the trade ceases, when you can then claim a terminal loss. Use the guidance if you're unsure. There's a link to a worksheet which will help you keep track of losses and work out the figures to enter on this page. You can also find a useful help sheet, HS227, on gov.uk. The next two pages are for tax deducted and Class 4 national insurance contributions. So this page is for tax deducted. Only complete this page if you're in the construction industry scheme. This is where you show the total amount of deductions made by contractors in the year. You'll find these on payment and deduction statements the contractor gives you, but don't send these with your return. On the Class 4 National Insurance Contributions or NICs page, we ask you to confirm if you are exempt from paying Class 4 NICs. To do this, select the options relevant to you. As you can see, there are very few exemptions. If none of these apply, you are not exempt, and Class 4 National Insurance will be included in your calculation if it's due. Next, use this space to give any other information you feel is needed to support your entries in the self-employment section. Don't use the Enter or Return key. This will cause an error message when you save and continue. Finally, we give you a summary of your entries in the self-employment section. Check the figures and go back and amend anything that's incorrect. You can print a copy of this page for your records. When you save and continue on the summary page, you're taken to Class 2 National Insurance Contributions, or NICs. If your taxable profits for the year 2023 to 2024 are less than the small profits threshold, £6,725, or you made a loss, you don't have to pay Class 2 NICs. However, you can choose to pay voluntary Class 2 NICs to protect your entitlement to state pension and certain benefits. We'll see how to do this shortly. If your taxable profits in 2023 to 2024 are from £6,725 up to the lower profits threshold of £12,570, you will not need to pay Class 2 NICs. Your contributions are treated as having been paid to protect your entitlement to state pension and certain benefits. If your taxable profits are more than £12,570, you must pay Class 2 NICs. For 2023 to 2024, that's £3.45 per week. On your tax return, the amount shown is the amount HMRC believe is due based on your national insurance records, so the number of weeks you were registered as self-employed. The amount will show even if your taxable profits are below the £6,725 threshold, or they're between £6,725 and £12,570. You'll see the amount of Class 2 NICs due to be paid, if any, in your tax calculation. The Help About link has more information. If the Class 2 amount shows as not available, this may be because you're not registered to pay Class 2 NICs, and you'll need to register online using form CWF1. You're trying to complete your return between 2 AM and 5 AM when the facility is unavailable, or you're completing your return outside of these hours, in which case click the Recalculate button to show the amount due. If the Class 2 amount shows zero, this may be due to one of these reasons. You're not registered to pay Class 2 NICs, and you'll need to register online using form CWF1. You may have paid the maximum NICs due. You may have received certain benefits, meaning no Class 2 NICs are due, or you may be paying Class 2 in a different way, for example, if you live abroad. If you're not sure any of these apply, you may need to contact the National Insurance Helpline. You can find the details on gov.uk. If you think the amount is incorrect, this may be because you started or stopped self-employment during the tax year. Select the Update Your Self-Employment Details link to update your details. Once you've done this, you must also select Recalculate to get the new amount. At the bottom of the page, if your taxable profit is below £6,725, we ask if you want to pay voluntary Class 2 NICs. If you do, answer yes to include the amount in your calculation. Otherwise, answer no, and Class 2 NICs will not be included. You cannot pay voluntary Class 2 national insurance through self-assessment after the 31st of January following the end of the tax year. For more information, search Voluntary National Insurance on gov.uk. If your taxable profit is £6,725 or above, also answer no. Where your profit is from £6,725 to £12,570, Class 2 NICs will not show in your calculation, but will be treated as paid for you. If it's above £12,570, the amount of Class 2 NICs due will be included in your tax calculation. I'll just remind you about our other webinars in the series. They are starting your online tax return, the employment section of your online tax return, the UK property section of your online tax return, other income and tax reliefs on your online tax return, finishing your online tax return, and your self-assessment, calculation and payments. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. We're nearly at the end of the webinar now, and here's a summary of what we've covered today. In today's webinar, we've looked at the details of your business and your turnover, expenses, capital allowances and balancing charges, other tax adjustments, the losses page, tax deducted and Class 4 national insurance, and Class 2 national insurance. If you need more help, our full range of help and guidance can be viewed online from your mobile, tablet or PC at any time. Thank you very much for watching, and goodbye for now.